Hey everybody, Smart Silver Stacker here. Hope you're doing well. I am joined today by Lior Gantz of Wealth Research Group. He's a longtime macro analyst and friend of the channel, and we've got a lot to cover today. We got silver, gold, tariffs, geopolitical turmoil, and what some may interpret as serious warning signs in the US and global economy. So I'm really excited to get this update. Thanks for joining me today, Lior.
Thanks for inviting me over.
Absolutely. Glad to have you again. And let's just start off with silver. I know that for stackers, this is a highly relevant topic, and we've seen a lot of interesting action in the silver market recently. Silver hit a 14-year high, approached $40. Spot price didn't quite get there, and we've had a slight correction since then. My take is that this is just a healthy consolidation in the silver market, but I'd like to know what you think. Do you see the upward trajectory of the silver price still in effect? We've got gold currently near record highs, but silver is still well below its record. And in inflation adjusted terms, it's only a fraction of its previous highs.
Yeah, I think certainly gold and silver had a phenomenal 2025 so far. And in my opinion, they've peaked for the year. So I don't expect much upside for the rest of 2025. But and I can explain very quickly why. The most rosy scenario for interest rates from the Fed was two rate cuts, and that's now been priced in after the jobs report that resulted in the firing of the statistician, the labor bureau head. So um, there's not much that can change this perspective from the markets, and therefore I do believe that the you won't see much from gold and silver. You've seen a lot, right? So I don't think that you can expect much for the rest of 2025. The dollar is having one of its worst years since 1971. It's very oversold. It's technically shorted as a hedge, and therefore the pain trade or the contrarian trade is a bit of a strong move for the dollar, which will impact gold and silver. Now, into 2026, I believe that 2026 will be a transformational year, not just for the global economy, but for the average American. I think this is the first year, 2026, that he feels this is the average American that something fundamental has changed in America and for the better, and it's going to be a year of optimism for Americans. And I think that a lot of money that is currently either on the sidelines or waiting or looking at what tariffs will do and all that kind of stuff from the top, from the top down. So from banks and Wall Street and huge construction and infrastructure and everything else, all the way down to the average American and how he makes decisions. 2026 will be the first year of real optimism in a long time. So uh, that's the kind of the perspective that I have about the rest of the year and going into 2026. From the perspective of gold and silver, they're both in a bull market that started basically with in April 2020 with the bottoms of the COVID March panic. Gold started around 1200 and silver started around $12 an ounce. So silver is more than tripled since, and gold is just about tripled since. This is not how gold or silver bull markets end. Um, if you look at the 2000s, gold started in 250, ended at 1900. If you look at silver, it started at 4, ended at 49. If you look at the 70s, which was a new financial system, uh, gold started at 35, which was fixed and ended with 800, and silver started around $1.92 and ended at 50. So you can see how if this bull market ended today, it would be the most uncharacteristic precious metals bull market in history. And the fundamentals support much higher gold and silver prices. So it is my opinion that gold is going to go a lot higher. towards the 5,000 by the end of the presidency, and silver might even hit triple digits by the end of the presidency, so by November of 2028. And this would not be a crazy move. From today's prices, this would be a 250% move for silver and just under 70% for gold.
Yeah, not unheard of in previous bull markets by any means. Let's talk about the jobs report. You mentioned that. So we had some weak jobs data in the July non-farm payroll. July was a miss. And then more importantly, the May and June numbers were revised down by more than 250,000 jobs. At the same time, we got the Fed telling us that they're concerned about inflation reacceleration and a potential impact on inflation of the tariffs. Trump has been highly critical of the Fed and specifically Fed Chair Jerome Powell's decisions to keep rates steady thus far. He's told us that he thinks the federal funds rate should be a full, I think, 3 percentage points lower than current levels. And now, following the July jobs report, as you mentioned, we've got a higher probability of rate cuts being priced in. We got the CME FedWatch tool now telling us there's a 93% chance of a rate cut at the next FOMC. What effect do you see on U.S. monetary policy of this new data? And also, what effect do you think this will have on the dollar moving forward?
Um, we are in an era where the Federal Reserve as an institution is going to be less and less important. Um, we are exiting a 112-year era where the Federal Reserve has gained more and more importance since the Federal Reserve Act of 1913. But in Trump's mind, and it's important to understand how Trump thinks. He thinks in first principles. So to him, nothing is a sacred cow. Certainly not the Federal Reserve. It's not something that has to be that way. And when he looks at the time that America was the most prosperous and the richest, it is before the Federal Reserve even came into being. And we have to realize how Trump looks at the Federal Reserve. Janet Yellen, who was the previous Secretary of Treasury, she refinanced a third of the U.S. debt with short-term bonds because of inflation. So you have $12 trillion that are coming due for Scott Bessent to refinance. That's a third of the national debt, right? And in a free world, in other words, a world where interest rates are set by the free markets, who would have the lowest interest rates? Which government would have the lowest interest rate in the world? There's a big case that can be made that apart from a few stable, small, prosperous economies like a Singapore type, the United States would have the lowest interest rates in the world, right? Biggest economy, most robust, most agile, in huge momentum, onshoring trillions of dollars worth of investments and manufacturing capacity. It's a country that is bottomed and is on the rise. So in his mind, he is thinking 12 trillion. I can refinance at 4% for 10 years, or I can refinance it at 1%. And in my way stands a banker. What? Why? And for him, he thinks in terms of first principles. So he looks at how the Federal Reserve even came into being. And it's important for Americans to understand how it came into being. Most Americans know that it came in a vote in Christmas Eve and a whole debacle around the vote itself. But how did Americans allow a Federal Reserve institution to come to America? And in this era of the late 1800s, there was a huge soul searching around the United States with scholars and academics after the Civil War, because the country was just coming out of that tragedy. And in the Ivy League universities in America, they were just starting to catch up to Oxford and to the European universities. So a lot of scholars, in order to really understand economics and and higher level education, they would go to Europe. And in that era of the 1880s and 1890s, a lot of scholars went to Europe. And in Europe, during that time, there was a country that took 300 principalities and merged them into one superpower, and that superpower was Germany. And to all of these scholars, the way that Germany was forming as this incredibly well run machine from a bureaucratic managerial class, that the lure was that this class of elites is not corrupted by trying to get voted into office. They don't need to promise anything. They are this unattached politics. They're not corrupted by any human whims and wheels. That is the best way to run a country. And at that time, when you look at German society, science and engineering and finance, it all made sense to the outside looking in. They were like, this is a phenomenal model. And they wanted to bring it to the United States. That managerial, bureaucratic state class of the 1880s and 1890s, 40 years later, we know what became of that country. But at that time, this was like the exemplary country of the world. And so when these Americans came back and started to explain this to the voters, this was very luring because corruption was running wild in the eyes of the voter because of the railroad magnates and the monopolies and the trusts and the combines, etc. That all the Rockefellers and the J.P. Morgans that they were hearing stories of. So this movement brought in these early presidents of the 1900s, and they commissioned a congressman by the name of Nelson Aldrich to go to Europe and study the central bank system. And he came back, explained it to Congress, and this is how the Federal Reserve came into being. So the Federal Reserve is the brainchild of looking at Germany in the late 1800s and how it was run. And to Trump, this is a sin. It's not an institution that should be sitting between him and the need of the United States to lower interest rates before it refinances $12 trillion. So I think that in the next year, you're going to see an entire new way that the Fed works. And the Fed's power over policy will be lessened. There will be a lot of deregulation that allows community banks to decide of their own interest rates in their respective communities. Because if you think about the United States, it's 50 states and 4,000 banks. And a lot of these areas are very different from each other. You cannot tell me that in Texas right now, the rates for mortgage or for business loans should be the same as in Minnesota. They're very different economies, or California, or Florida. So what you need is a different layer of economics, which is not centralized, and I think that's the model that we're entering into, and I think you'll see more and more of that as the months go by in the Trump administration.
Well, a move towards a free market system of setting interest rates, I think, would certainly be beneficial for the economy. I will push back a little bit that the U.S. would have the lowest interest rates globally. All the factors that you listed, I think, are valid. However, the massive size of the U.S. national debt, don't you think that might have some impact on the interest rates specifically for U.S. Treasuries and U.S. government debt?
I think that if the entire world was a free market economy, then the United States would certainly have one of the lowest interest rates in the world. But because interest rates are artificial in many countries, it will probably not be wise for the United States to be the first one to let the free markets decide. In other words, it would be tricky. But I do think that in the next few months, Trump will find a solution on how to refinance 12 trillion of debt at a much lower interest rate. That's certainly something creative is going to come from the government on how to do that. I think that the national debt is important. I'm not saying the national debt is not important, but the national debt is is an is a consequence of the lunacy of Washington during the last 40 or 50 years, specifically during the last 20, 30 years. And on the flip side, you can look at household wealth in the United States and on the potential of a sovereign wealth fund. And that far, far, far eclipses the 36 trillion, 37 trillion in national debt. Just the household wealth in America right now is about 115 trillion. So if the US was a balance sheet, it would not be a bad balance sheet. Now, if you look at the sovereign wealth fund that's about to start in America, it can easily become the world's largest sovereign wealth fund. And if it will become the world's largest, then you're talking about tens of trillions in wealth that will be created by the government with an equity position for every American. So the problem with the United States is that it financed the entire world for the last 30 years. That was the model. You go into debt, you appease your friends and your foes at the expense of the American taxpayer, and you hope that at the end of the day, this reciprocity will lead into some sustainable peace. And it was a fantasy. And by 2011, this became very known that this is a fantasy. You are literally going into debt in order to finance the growth of the Chinese military. And that's when Americans started to understand something's wrong, but it took almost a decade for them to be really persuaded and mandate an entirely new way of governing the U.S. foreign policy and domestic economic policy like we have today.
While we're on the topic of foreign policy, transition into that, I'd like to get your take on China. You mentioned
Okay.
the U.S. Financing, the rest of the world, and currently between the U.S. and China, trade and tech tensions remain incredibly high. If we get more economic decoupling or even some kind of a confrontation between the US and China, how do you see that rippling through the global economy, through the dollar, through commodities? What impacts do you think that would have?
Um, I think uh, we have entered an era where uh, the U.S. and China are at war, but it's an unconventional war. So, um, in 1999, two Chinese officials wrote the doctrine in the book about how the CCP should wage war on the United States in the 21st century. And the book argued, and this is you have to understand, it's not just a regular book. This is a book that became the Bible for the CCP. The book argued that China cannot compete with America on technology and on military back then, 1999. Therefore, it has to use unconventional war. And in order to do that, they used a lot of the Russian tactics of war, which are propaganda, brainwashing, and getting into America's youth, and they've done that brilliantly. There are so many self-hating Americans right now that it's literally it's a plague. And then they worked their way into the heartland of America with drugs. They have convinced the American elites to move their manufacturing, deindustrialize, and move into China. They have allowed China to enter into Africa, into Latin America, and into Europe. And effectively, China has been able to become a real threat. Now, it's very hard to convince Americans what a threat even is. If you ask the average American, he does not view China as a real threat, um, because a real American doesn't recognize threat anymore. It's been so long since a real threat existed, but they are a real threat. And the reason is not because they can invade America. It's because of the power they can have over the supply chains and the trade routes that allow Americans to have the way of life that they have. And I think that that is effectively what you're going to see unfolding in the next 2 decades. This it's not a decoupling, more like a realignment of uh, who China and who the United States trade with, on what level, and what are the global choke points or the key trade routes that they both use. We all know about the Chinese Belt and Road Initiative from mainland China through Eurasia into Europe. And the reason that it's so important to them is because there's a chain of islands that basically block China from ever becoming America because they don't have access to the open seas. There's a number of straits that can easily be blocked, and that's why China has always been a mighty regional power, but never a global power. And for them, obviously, the way to break that first island chain um, is to defeat Taiwan, which is stands right in the middle of that chain of islands. But they can also do it through the Belt and Road Initiative. So that's very important to them. Um, but they have done many other things as well, and that is the reason that we have tariffs enacted in America, because tariffs, what they do is they collapse the Chinese model of owning the manufacturing chains and the processing and the value chain at home, and through that wielding control over America in many ways, and other countries, obviously, to a much larger degree. When you move these manufacturing facilities out of China and into India, out of China and back to the United States, out of China and into smaller countries with lower salaries, then their model collapses because their model is based solely on generating revenue, or mostly for generating revenues from exports. Their domestic economy is very small. The average Chinese has a per capita GDP of about $15,000. That's compared to America, where it's over $50,000. So you can see how that becomes a trap for them, and they need to realign their model. What Trump wants to do is not to break China's back, but to move them away from this unsustainable model that they have, and for them to reinvent themselves in a way that both countries can prosper. Um, and that's it. What he wants is for both countries to prosper, not for America to be this superpower and for China to be this weak power, but for both countries to prosper independently of each other, maybe do continue to do business, etc. But the stated goal of the CCP is to take down America by 2049, and that is effectively what the Trump administration is. That's why it's waging war against the CCP, because the CCP has a stated goal to take down America by 2049. If it works, and the Chinese understand that the cost to defeat America is too great, because now there's real leadership in Washington, and that the country's united behind this, etc., etc., then the crown jewel of Trump's presidency is to start the process of denuclearization for both of these countries and for Russia. Now, it's a long ways off, but that is effectively what he wants his legacy to be of the MAGA movement. So that's kind of the long answer. Now, how will that impact tariffs and everything else? The first thing that the Trump administration is doing is it's trying to secure allies in key choke points. So you had the Panama Canal, if you remember. You have Greenland, and that's why Canada is important, because if Canada becomes part of the United States, then now you have a very sustainable way for the United States to uh, uh, project power into Europe and into and to Russia. If you remember, Alaska and Russia are very close together. So that's really important, and it's a big part of it. And if you research the history of the United States and Greenland, you'll see it's 150 years old history of the United States using um, a partnership with Greenland to help Europe. Um, that's these are two key areas. You have other key areas. For example, you saw the two heads of states are coming from the Caucasus. The Caucasus are Georgia, Armenia, Azerbaijan. That area is very important because this is where Russia tried to create their own north to south Belt and Road Initiative all the way to Syria and then into the Med for them to gain access to the open seas. And that has collapsed. And so that is another choke point. Another big one is the Gaza Strip, where the potential for that area to turn into a prosperous model to connect India through the Emirates and Saudi Arabia into Israel and then to Europe is a key area of prosperity that is also in the works. So you can see how everything is about supply chains, reliable supply chains, and trade routes. This world of sourcing openly from every country, depending on price alone, is over. We are now sourcing from reliable areas, even if the prices are higher. So that is the model that you're going into. Tariffs as a weapon, okay, and it's a very effective weapon because there are no coffins wrapped in flags in American flags when you use that weapon, and that is America's best um, weapon because its economy is unmatched. It's hard to kind of explain to Americans how good their economy is, but I'll try to give you an example. In Europe, for example, if you live in Milan, for in the north of Italy, and your bank that you work for a bank in northern Italy, and the bank tells you, hey, your next job you can get a promotion if you move to Rome. Now that's a 2 hour, 3 hour drive. Okay, uh, the worker can tell you, give me a year to think about that. In America, you can tell somebody that lives in Colorado that you need him to start his job in Miami next week, and that's it. He'll move. The agility of America is unmatched anywhere in history, and that's why it has a lot of power if it uses its economy instead of its I would say it's CIA, deep state, State Department, USAID, these all these tools that are very pretentious and condescending to other countries, where you come to another country and say, "Hey, you do it our way, and we'll give you money." So I think that this model is the real model, the merits model, and whichever country is not proud enough, is not prospering enough, doesn't have the birth rates to replace its dying population, like in many countries in Europe, like in South Korea, like in Japan. All these countries are going to go through a lot of crises because they're dying. And that's effectively what this administration is seeing. That we went from 50 countries at the turn of the 20th century to 200 countries at the turn of the 21st century, and most of them only exist because America either protects them with a blanket of of bases of the Navy or at the expense of the American taxpayer. So that is the story. Which countries can last what's going to happen in the next 20 years of the world going back to merit instead of financed by American debt.
So when it comes to U.S. markets specifically, if you look a lot of the valuation metrics out there, whether it's the Shiller PE or the Buffett indicator, there are signs that we are looking at some extreme valuations in U.S. equities, like the highest on record, according to some of these metrics.
Yeah.
Do you view U.S. stocks against the backdrop that you just described as being in a bubble? Is this time different? What's your view on U.S. equity valuations right now?
Um, it's true that historically, using Schiller and other P ratios and price to sales, there are many metrics that show that the U.S. stock market is at some of the highest extremes of valuations that it's ever been, certainly against the rest of the world. But um, the West, as most people knew it between 1945 and today, the West, when you say the West, you mean the United States, Europe, maybe Japan, Australia, South Korea, etc. The West is dead. And what's forming is you have this renaissance, a golden age, just starting in America. I say that it's just starting because if you ask most Americans, they don't even see it themselves anymore. It's almost like Americans have been underwater for like 30 years looking at the abyss, and now their eyes are just starting to look up. They see the skies, but then their heads come right back into the abyss. So they're trying to decide like uh, what's happening. Is this good or bad? And there's still not a lot of optimism. I think that will come next year, where their entire head is above the water, and they really realize that hey, that we are starting a real boom. We are going back to being a country, because you were literally selling for parts. Like Trump says, you were a dead country a year ago, and now you're the hottest thing. It's true. Um, and like Elon has said that if Kamala would have won the elections, then it would not be a country anymore. And I believe that you would have been. Um, what I mean is you wouldn't be a constitutional republic anymore, basically. So to go back, kind of to your question, can you explain that again? Your exact question about markets. So um, if uh, you are entering this golden age and the GDP growth, because of productivity and the AI boom and the infrastructure boom and going back to becoming an industrialized nation, if GDP growth is going to be about 4 to 5% and not this sleepy 2 to 3% that you've had for the longest time, and if this is real productivity growth, in other words, you have autonomous, and you have AI, and you have energy, which is the bedrock of the Trump presidency, then uh, P ratios are probably very cheap right now because you're going to see a lot of profits, and not only in the S&P 500, but in the Russell 2000, the Wilshire 5000, like in small and mid caps, like the real America, and not just the coastal cities or like the Mag 7, etc. So I think personally that is the right way to look at it. And if you look at it that way, then no, you're not in a very, very expensive stock market, unsustainable, etc. And two, you're certainly not in a bubble, because if you ask the average American, they're not optimistic, they're not euphoric. There's about $8 or $9 trillion in money market accounts. There is an entire generation of millennials and Gen Zers that are postponing marriage, not having children. These are all signs of pessimism, not optimism. Not buying homes. Um, you're not in a bubble in America, and I would even go on to tell you that um, for this to be a bubble, you'd have to see reckless behavior. And on April 2nd, on Liberation Day, you saw the markets tanking about 20% easily. So those are all signs that there's not euphoria in any way, shape, or form. I do believe that it will come later this decade. Towards the end of the decade, you will see this bull market mature, but not right now.
All right. So With all of that being said, everything that we've covered today, I got one question to wrap this up with. If you could only hold one asset class for the next 12 months, whether it be stocks, bonds, gold, silver, cash, what would it be and why?
First of all, that's a great question. It's a great question, even to think about personally. Um, I would say I would definitely hold stocks. Um, the opportunities that you have with businesses, stocks are partial ownerships of business, and American stocks are partial ownership in the golden age that's starting. So there are many companies that are in a position to double and triple in the next 12 months. And these are not, I'm not talking about risky, um, you know, early stage companies. I'm talking about companies that are some of the most reputable in the world. So I would say definitely, if you think like me, then I think the biggest upside is in select stocks that have incredible potential right now. You can download my portfolio if you want. It's at wealthresearchgroup.com/portfolio and see the companies that I like. Now, I don't think all of them um, will double in the next year, of course. But I believe that there are many opportunities in the U.S. stock market from companies that, if I tell you their names, you would easily know them.
And I would encourage everybody watching to check out your work at Wealth Research Group. If you want to just let everybody know, I know that's one specific place where they can see your portfolio, but is there anything else that you'd like to have the listeners check out?
I mean, if you want the best thing, in my opinion, it's the newsletter because that's how something like you just watched, if you're still listening to this and liked what you heard, or just intrigued in my point of view of the world, then Wealth Research Group goes out every Sunday and Tuesday and Thursday, and that's basically what we cover: economics, specific companies, and geopolitics.
It's a great newsletter. It always has
Thank you.
thought-provoking stuff. I enjoy reading it myself. All right, well, thank you, Lior. I appreciate you coming on and sharing your insights with us, and we'll have to do it again sometime soon.
Thank you so much.
That was great to have you. All right, thanks, everybody. Check out Lior's work, link in the description. Catch you next time.